And this is David Luczkow with Right Key Mortgage, and what I'm talking about today is I want to talk to anyone who has put their loan into forbearance. So as part of the coronavirus relief package, any homeowner in the US, if they felt they were going to have trouble making their mortgage payments, could put their loan into forbearance, which means you didn't have to make your mortgage payment and it wasn't a default on your loan and it wouldn't impact your credit. So now we're getting a lot of inquiries from clients who are in forbearance on their current mortgage, but they're seeing how low interest rates are. Again, if your loan's more than 6 months old, you can most likely refinance and save a significant amount of money, which means if you had a mortgage, last March, you put it into forbearance, you probably should be refinancing that mortgage or looking at refinancing that mortgage. So here's how it works in summary if you are in forbearance. You kind of have two choices when you take your loan out of forbearance. You can bring the loan current, and so what that means is you make a payment that pays for all of the missed mortgage payments. Obviously, if you missed 6 mortgage payments and it was $2,000 a month, that's $12,000 you got to come up with. And the whole point of going into forbearance was you couldn't afford the mortgage in theory, so obviously it's tough for people to bring the loan current. But if you're able to bring the loan current, make up for all the last payments, missed payments, then you can refinance your mortgage as soon as you make one payment on the mortgage. So you have to come out of forbearance, make one payment. Now the other option lenders are offering people to say, hey, we understand you can't pay all this money, all the missed payments, you can't bring it current. So what we'll do is we'll take those payments and they move it to the end of the loan. They add it to what you owe on the loan, and it'll be basically a loan modification. Now if you choose that option where you modify your loan, you don't bring it current, you modify a loan, when you come out of forbearance, you need to make 3 mortgage payments before you can refinance. The reason being, the lenders and the guidance from the lenders is they want to make sure that you can actually afford your mortgage payment. So they want to see you make 3 payments just as sort of as proof that you're able to afford that mortgage payment, and then we can refinance you. So if you have any question, if you're in forbearance and you're looking at refinancing, which by the way, just about anybody who has a mortgage, again, more than 6 months old, should be looking at refinancing, just give us a shout and we'll talk you through the different options. And if you need to make 3 payments, it probably makes sense to start bringing, start payments, bring your mortgage out of forbearance so you can take advantage of low rates and refinance. David Luczkow with Right Key Mortgage, and thanks for listening.